So what they're doing is applying already very strong scrutiny to the expenses that a borrower says they have each month and their income sources as well. Well, hi again, everybody. Each month I run a number of surveys of real estate agents, mortgage brokers, consumers, businesses, all sorts of people out there. And for some of the surveys, I invite people to give insights not just into what they're seeing in the economy or in their sector, but what they can see with regard to bank lending as well. You may know that in the general media, it's pretty hard to get information on how banks are changing their lending policies. Well, of course, at the moment, the lending policies are tightening up quite a bit for a variety of reasons. So I'm just going to run through a few of the things that are underway at the moment, which people need to be aware of. You'll obviously get the best information talking with your mortgage advisor there, but you need to be aware of when you're contemplating a home mortgage in the near future. Now, one of the key things is from December 1st, the banks have to meet new requirements from the CCCFA. I think that's Consumer Credit Contracts and Finance Act. Basically, they have to be dead certain that when they make a loan to somebody, the person can service it and the person can definitely repay it at some point down the track. Now, the banks don't want to be caught out here, so what they're doing is applying already very strong scrutiny to the expenses that a borrower says they have each month and their income sources as well. And you are going to have to prove what your expenses are for certain things. And if the bank says, actually, you seem to be over the limits there, and you say, that's okay, I'm definitely going to change now, I'm going to cut back on the number of times I go to restaurants. Some of the banks are saying, prove it. For 3 months, prove that you can do that cutback, then come back to us. So very sort of stringent assessments being made of expenses there. And on the income side as well, banks are increasingly shading the income you anticipate from boarders, from flatmates, or even from tenants if you're applying for an investment property, for instance. If you are working out all your income and expenses there, you'll come out with a number at the end of what the banks call UMI, or uncommitted monthly income. Basically, it's some spare cash that you will have around each month to handle unexpected expenses, which for all of us definitely come along. The banks are increasing the size of the UMI that they require, so you've got more spare cash on hand to make sure you can definitely service the mortgage, especially now, of course, as interest rates are going up. Banks are increasing the test interest rates for when you do your borrowing there, and of course, over time with these sort of rules being applied, it is starting to cut back on the number of people who can actually get a property at the moment. Another thing out there, of course, is with the banks having to be increasingly certain that a person will have the income to service a mortgage, there seems to be a decrease in the availability of loans to people 55 years and over, because the banks will rightly assume, well, maybe from 65 they retire, they're going to be living on national superannuation and earnings from investments. Maybe the income won't be big enough to service a mortgage. So banks are looking at that and not paying as much attention as they would have in the past to maybe the overall value of your portfolio property and existing debt levels. And also maybe one other element there, with rapid increases in construction costs, some people who have arranged finance a few months back for a new build or some construction they wanted to do, they're going back to the bank now, and the bank is saying, actually, we cannot give you that money any longer because we have far reduced certainty about what the final cost of your project is going to be. So look, overall, there's a general tightening of lending criteria, but always keep in mind banks make money by lending money. So they want to lend the money, but they have a lot of new requirements that they have to meet from the Reserve Bank. I even talked about the cutback on availability of 20% deposit lending, for instance. Cutbacks or new rules from the government to put in place. So just be aware of that. Have a decent chat with your mortgage advisors so you've got a realistic assessment on what your chances are going to be to do some borrowing in the near future. All the best.